Okay. Hello, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Step newsletter. I'll put the link in the chat. And every 2 weeks, we host our online insights with a different investor each time. And today, our guest is Alex Chompf. Except first, we're going to have Joseph, our host, Joseph, introduce himself and tell you what he does.
Sure, it's no problem. It's funny how you do that every time, Bonnie.
I
Uh,
do.
Good morning, everyone. Joseph Katz. I am a startup marketing guy. I've helped companies go from unknown to well-known. I've worked for a number of early stage companies over the years and kind of learned where the pitfalls are, and I help companies grow, and basically what it comes down to. So go-to-market strategy and customer acquisition is really the core of what I do. If anyone needs those kind of help or just want to talk about startups, I'm always willing to set some time up. Hope everyone enjoys today's event.
Yes, and if you ever need help with your pitch deck, which all founders do, or introductions to investors or even business clients, let us know. I'm sorry. So, Alex, do you want to tell us a bit about yourself, or should we go around the room and have the participant?
Why don't we do me last? Because I'm going to talk for a few minutes anyway.
I hope you're going to talk for more than a few minutes. I know you're going to talk for more than a few minutes. So, Sam, take it away.
Hi, I'm Sam Bogosh, CEO of Axel AI. We do AI for video and are growing mostly organically, but also looking at some M&A.
Oh, thank you. Eric Becker, former head of the Joe Milan fan club, but haven't heard about it in a while. So take it away.
Good morning. I apologize. I'm not fully awake. Eric Becker, I'm the founder and CEO of Millimatch, and we have developed an organizational intelligence system for organizations looking for what's going on between strategy and execution. But it's great to be here. Deborah, haven't seen you in a while, and of course all the others. And yes, I am the head of Joe Milan's fan club. We're now up to 2 people, Joe and myself. So that's good. We're growing.
Three.
Never give up.
I'm your third fan over here.
See, you have to promote it. That's how you get more fans. Henrik.
Yes, good morning, Henrik Lebord. I'm a fractional CFO. I help startups and scale-ups, generally in tech and business services, with their financial management needs as they grow. Thank you.
Thank you. Ian.
Yeah. Morning, everybody. Ian Garmez. I'm COO of the Virtual Film School. We are a consulting firm in LA, and we help growing companies with their social video strategy and implementation. And I'm based in Toronto.
He's going to be visiting us in New York soon.
Yes, I should be in New York sometime in September.
Thank you.
I'll let you know.
Mary, welcome back. And you did get the link finally.
Yeah, thank you. I got the link finally. I look forward to coming to more of these. I'm Mary Scott, former videographer in New York, and currently working with startups in St. Louis. We have a really healthy startup ecosystem, and I love talking to investors on my podcast so that startups know what to have prepared before they bother the investors.
Oh, you should put the link to your podcast in the chat. Don't forget.
Thank you. I will do that.
I know, Deborah.
Hi, everyone. I'm Deborah Lee, and nice to see some friends here, Eric and Alex. I know you guys as well as Bonnie, and I've been here in the past, haven't been here in a while, so good to see faces again. I work with startups and small businesses and help them with their strategic planning, strategy, business development. Also work with Bonnie on helping startups with their investor outreach materials when they're raising capital. So nice to be here.
Oh, good to see you. John. And welcome back. We haven't seen you in a while.
Let me unmute myself. Yeah, I'm not in my normal office. Good morning, Bonnie. Yeah, it's good to be back. I see you on Joe's place, and I just remembered today, oh, we're on here, and it looks like it's going to be a good topic and a good thing today.
So you want to tell us about your company?
Yeah, so I am the CEO of Since, and what we are developing is a whole infrastructure, including an app where folks can, that AI will help to put together videos. And it's not fake stuff. It's where you have events or activities where people have their phones out, they're shooting video and building experience videos, highlight reels from that, where all you do is upload it to the cloud and you get videos back. But it's not doing fake things. It doesn't create stuff from nothing. It's your real activities and events.
Oh, thank you. Well, we're always happy to see Andrea, who's always in transit, as I said. Andrea Lou is family office, and when she has comments, she always puts them in the chat, and I always read them. So, Joe, you thought I forgot you. I would never forget you.
Here in Austin, most of you know me. So a lot of familiar faces here. Was in the public markets for 20 years, ran a multifamily office, and was out on Sand Hill Road in Menlo Park, and I got exposure to the venture world 30 years ago, and trying to build a solution to bring more public market professional investment practices into the private markets early stage. So trying to, as I like to say, fix how we fund innovation. So
thank you. So, Alex, take it away. And
Okay.
thank you. Once again, I thank you for doing this.
Well, it's an honor and a pleasure to be here. And just thank you. Thank you for inviting me, and thank you for the opportunity to share. Probably the most important and useful thing to know is that I'm a father of 5. I've been married for 28 years, and my wife and I have been together for 30. So that's how I measure my life. Like everything is in that context. And well, along the way, much like Forrest Gump, I have stumbled into a number of movies that were not my movies. They were somebody else's movie, but I got shot in the ass and I got to go see the president. So, it's good to be here. It's it's wonderful to be able to share the scars with you. And
yeah,
I hope they're useful. I'll try not to embarrass myself. Let me start with, I'm going to share the screen. So I'm going to probably need permission to share. And can I just get a quick show of hands? How many people here have ever, as a startup, gone out and sought investment from other than friends and family? Okay, so most of the crowd. All right. That's, I live on the other side of that exchange. I'm a VC. I write checks. I run a team. For those of you who have gone through that experience, how many people have gone past, angels and taken money from professional money managers? Okay. Does anybody have any desire to take money from professional money? I don't recommend it as a professional money manager, but if we can talk you into taking our check, we'll try to make ourselves useful. Okay. So let me share my screen. Can I send a request to you?
Yeah, I got it.
So, okay, let me try that. Okay, I'm going to apologize for flashing my desktop at you. I don't know what we're going to get here. All right, that worked out okay. That was reasonable. So I run a FINRA registered company called Evolution Ventures Fund Management. Evolution Ventures Fund Management invests and manages money for people who invest. And what Bonnie and I were talking about is that it can be helpful to get an investor's perspective on things. I'm going to try not to waste your time with what I would think of as like hygiene stuff, like the basics of getting investment. Let's talk about something that's kind of more interesting. And because, you have to cover the basics. Let's just talk about the fact that if you've ever raised money from private investors, you've almost certainly operated under Regulation D of Rule 501 of the Securities Act, and you've sold unregistered securities. If you've ever purchased those securities, you've been on the other side of the transaction. Generally speaking, it's wildly risky. It's totally crazy. There's so much likelihood of so much change when you start early in the process, where we do, that you just have to warn everybody up front not to focus too much on what are essentially projections. Okay, we're just going to talk about how the industry works for a minute. We're a pre-seed to seed level investor. Okay. Has everybody or nobody seen this chart on the left-hand side? Because I find it's really useful if you've never seen it. Anybody out there seen this chart before in one form or another? Yeah, okay. This is pretty useful. This is a way to understand how startups live. I didn't draw this. It's a really well-known chart in the industry. I think it's essentially public domain at this point. And what it indicates on the left-hand side is that as your revenue climbs over time, which is your x-axis here, this red line represents the value of your company as you're building. Okay. And there's a period before you hit this blue line of break even, where your company is worth less than nothing. And, you know, colloquially, that's called the valley of death. And that's where we invest exclusively. That's where we do all of our shopping. Oh, I got a little disclaimer here. Okay. So, you know, when you shop in the valley of death, you could think of writing checks as handing out water. And you don't give all your water to any one individual or one group. And many people are simply not going to make it out of this place. They're just not going to make it. And that's just the nature of what we're investing into. If you do make it, if you do reach a point where you are starting to generate free cash flow, or you have significant sales, if you're in certain industries like software, then you begin to enter into a stage where you can be, you know, valued more appropriately. So if you've used money in a convertible instrument, that's almost certainly happened here in the Valley of Death. Okay. Around the time that you know how much your price is per share, you're starting to approach this first step. And then from there are a number of ways that you can get out into the world, including, of course, going public with an IPO. But actually, you know, probably 2/3 of the exits that occur in the industry occur right here, somewhere between this break-even line and the second step. And in terms of, you know, how do you define pre-seed and seed level companies? We use industry standard terms. And what we mean is you're a pre-seed company if you have not yet raised $1 million. If you've raised between $1 million and $5 million, you're a pre-seed level, or you're a seed level company. And once you leave that point, typically you're taking this first step right here. And we're not usually going to invest in you anymore at that point. You know, what we like to say is that we offer coaching, connections, and capital. And of those, capital is probably the least valuable. And that's because community matters a great deal. Who you know and what you know. The ability to connect to groups like this and share the word about your companies. These are valuable things. Most of what we do for startups is free, pro bono. But we just, generally speaking, we offer robust programs and communities for startups, and they're free. Sometimes we offer some pattern education, you know, which is very early stage stuff, but mostly it's free. We make our money from our investors, who pay us management fees and what's called carried interest, or you know, a profit share on net profit. That's what carried interest is. That's generally how we get paid, and that's how we keep the lights on. Okay. And I should say, by the way, feel free to stop me. And Bonnie, if you don't mind monitoring the chat and letting me know if a question comes up.
Oh yeah, Mary wants a copy of the slide.
Absolutely. Yeah, happy to share. You betcha. You betcha. Now, of course, it's important in venture capital to make money. We're professional money managers. We need to return money to our investors. But this is not actually the reason that I get up in the morning. The reason I get up in the morning is my beautiful family. That's what gets me up. And while I'm up, while I'm awake, my goal is to try to be useful. Okay. And there's only one thing that I've turned out to ever be really any good at. And that's understanding how the Legos of capitalism are put together, right? You know, anybody who's ever played with Legos knows you can build anything you want with Legos. And what I've noticed in my travels on the world is that capitalism has kind of a bad name. And I've also noticed that, particularly in the United States in the last 20 years, there's been this tendency to break the windows. People feel like, you know, it's not their country. These aren't their companies. They don't own the joint. And so I really would like to create a world where people feel like they own the joint. And I think that the best thing that I can do in that space is to teach the building blocks of capitalism. And I think of it as ethical capitalism. That's not a word, that's not a term that I made up. In the same way that I think about capitalism as like a car or a gun. You know, capitalism was not given to us from on high. It's something that we created, we invented. It's the most useful way that I know to lift people collectively financially so they can take care of themselves and their families and their communities in a non-confiscatory way. But I think it's important to understand that just like you use a gun or just like you use a car, you need to use the tool of capitalism with intent. You need to think about what it is that you're doing so that you have the outcome that you're desiring upon the world. And of course, while we're doing that, we need to make a profit. And for us, it's really important to walk the talk and talk the walk, like to be straight. Capitalism has enough problems without, you know, people creating additional problems through a lack of, you know, integrity. We run a pretty decent sized team over at Evolution, and this is kind of the core of our team, the leadership of our team. I'm the executive director. If anybody here has served in the military, show of hands, any military veterans in the room? Okay, I guess I'm the only one then. I did serve in the United States Marine Corps. I am a second generation Marine. While I was there, I served in the infantry, and my responsibilities, among other things, included becoming the security chief of a nuclear weapons installation. And so this kind of set the hook for me. But, you know, even before that, in 1990, I really got my start in San Francisco, banging on a keyboard for money for a Japanese company. I was doing spreadsheets back in 1990. For those of you who, I see some gray hair out there like mine. So for those of you that remember Lotus 123, this is where I got this is where all my thinking was shaped. And thank goodness, because that's the only reason I can put my kids through school. Yeah, really nice. I was washing dishes at Burger King. I washed dishes at all the finest places. I washed dishes at Burger King and at Carl's Jr. and at Pasta Bona and Aladino's Pizza. And a gentleman that I was babysitting for turned out to be the project manager of the largest renovation on the West Coast. And he hired me and gave me a computer and set my life track in terms of how I was going to be able to earn money. Along the way, after I got out of the military, met my wife and had to make a living, I was very, very fortunate to be recruited into an investor firm, a venture capital firm called Kleiner, Perkins, Caufield, and Byers.
A big one.
Yeah, I had no idea who they were. Honestly, God, I didn't know. I was 27 years old, and I got 2 job offers at the same time. I got a job offer to go work as a worldwide customer service leader for a search engine that preceded Google. And I got a job to go be offered to go be the director of technology for Kleiner Perkins. And I'd never heard of Kleiner. I didn't know who they were. And what it really came down to for me was the fact that I got to manage fewer people at Kleiner, because I like to solve problems. I like to be on the engineering side of things. I like to fix things. And I didn't want to manage hundreds of people. I wanted to manage 12 people. And I wanted to do engineering things. And so that's how I ended up there. And these guys turned out to be, you know, lions of the industry. I mean, they were, you know, if you know who if you know, they were just the guys at the top there. Joe and I were talking about it. We were talking about where you end up on Sand Hill Road. You know, I can remember, Joe, the first time I drove up Sand Hill Road looking for the address sign off to the side. Oh, geez, you know, and these guys were all the way at the top. And they had some partners, including, if you know Roger McNamee's work, or you know Jim Barksdale's work, they had some partners that they had been involved in. And because it was kind of a small community and kind of insular, I ended up doing the same thing for their partners. And I did that through the dot-com boom. And when it was over, my wife and I decided that we wanted to go do something that mattered. And that's why we went to have kids. And when my youngest was old enough, my wife said I could go play again. And you know, here I am. And so along the way, I've created a number of organizations, but you know, relative to this group, it's about, you know, principally investment. And along the way, I've gotten amazingly lucky. And to Techstar's great loss, I've managed to pick up their investment manager and their program manager. And so they constitute, you know, the other 2/3 of the leadership team and are invaluable in terms of helping us to, you know, turn the wheel of opportunity. You know, so for the 70 deals that Hannah Savage has put together, she went through about 10,000. And she, you know, chewed through about 5 cohorts around the world. And I don't know how many companies Lisa's looked at. She was there for 3 times as long as Hannah was. So that's your team if you come through our process that you're going to meet along the way. And this is probably the most useful, counterintuitive chart that we've come, or set of charts that we've come across along the way to kind of explain this whole, why people don't feel like they own the joint anymore. Right? And on the left-hand side, you see the rising GDP of the United States over about a 30-year period. And it, you know, more or less looks like what you would expect that it looks like. It's a line that goes from the bottom left to the top right and shows growth. And on the right-hand side are the number of publicly traded companies in the United States over the same period. And so this is very interesting. And actually, I had the good luck to be with, you know, KP right here at the peak of the peak. Didn't know what I didn't know, guys. When I was 27, my principal skill was that I could stand up straight and I could show up early and I could say, yes, sir, with a great deal of conviction. And this was considered very desirable. And so there I was. I didn't know where I was, honestly. No idea. Okay, it wasn't until years later, looking back, that I understood what I'd been part of. And in the United States, as all of these publicly traded companies have come off the market or failed to get to the market, okay, I was reading that there were 480 IPOs in 1 year at the height of this boom. Okay. Today, we might see 15 IPOs in a year, 20 IPOs in a year, perhaps. SOX, or Sarbanes-Oxley, was an important piece of legislation that took a lot of the wind out of the sails. And what the implication of this is that, you know, the growth that's occurring in the economy. Remember, I showed you that chart earlier where people kind of get acquired on that first step. Well, that's long, long, long before you ever get to the public markets. And that's where the principal growth is occurring in our estimation in the public markets. Now, it happens that, you know, to participate in the public markets, you can, any retail investor can participate, but to participate in the private markets, you know, for better or for worse, the United States government has put some barriers in place. And the most important barrier is that you have to be an accredited investor. Now, I will say that it does strike me as interesting that the same government that protects you from investing in your neighbor provisions you a lottery. I think that this is a very, you know, this is interesting. If I was ever going to get into politics, that'd be the one topic that I would get in on, would be this idea that you're protecting me from my neighbor while provisioning me a lottery, as though that's a good idea. Now, we're not the only ones who have noticed this trend, okay? I mean, we didn't draw those charts. That's widely publicly available information. But Bonnie, yes, hi.
Yeah, Mary Scott had a question. She said, is that because, referring to last one, is that because of mergers or more the downturn in
The chart on the right-hand side? Yes,
yeah,
some aspect of it is acquisition, certainly. Absolutely. But the principal message that I would take from that would be that most companies elect to not go public. And the reason they elect to not go public is because the requirements to go public are simply very heavy and often outweigh the benefits of going public. It's been our observation that, some of the companies that go public because they can't live on the private side anymore.
yeah,
The most classic example of that in recent memory would be the company Uber. Right. Uber was a really good example. Uber was never profitable on a per ride basis. Right. And the bigger Uber got, the less profitable it became. That's why everybody used Uber, because everybody knew and somehow intuitively you knew it was cheaper than driving yourself. Right. And the fact of the matter is that venture capital doesn't get to overcome the laws of physics. Okay. And Uber was principally financed by a combination of investor money and Uber drivers not understanding what they were doing to their vehicles. Because principally they were taking an asset and they were depreciating it very, very quickly. And you were taking advantage of that as a rider. And then to make up the additional shortfall, investors were paying. And as Uber got bigger and bigger and bigger, investors put more and more in and said, grow, 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 grow. But they had this problem. They were never profitable. At the core, the business wasn't profitable. And so it went over into the public side because the public is very, very hungry for opportunities. And Uber is a publicly facing company. And Uber got a lot of capital to continue its work. And I think may recently have, subsequent to its IPO, found a point where at least on a per ride basis, it's break even. But I have noticed that my Uber rides have gotten expensive along the way. That's some of the discipline of the public markets, right? So if you know who Larry Fink is, or you know who Jamie Dimon is.
yeah. Oh, by the way, Ian added that subsidized by Vision Fund, which is golf money.
Well, yeah. Certainly Masa-san absolutely changed the outlines of the investment business. He redrew the outlines of the investment business. And for those of you who were involved in that 2020, 2021 explosion of investment and on paper growth, that was a reflection in large part of that huge influx of money. See, the Valley learned a long, long time ago that there are only a certain number of investable companies in any given year. And throwing an extra zero at the problem doesn't actually create more investable companies. It just means that each company gets valued differently than it did before you added the extra zeros. Right? There's a finite supply of entrepreneurs that are creating companies that are venture capital. And there's a fierce competition among investors to be able to access that deal flow. And, what I want to get at here is just a couple of the larger investors in the world are trying to communicate to people, listen, if you can get in on the private side, you need to get in on the private side. Something like a fifth of your portfolio should be on the private side, because otherwise you're missing out on where the growth is in the American economy. And so that's really what we do. We create those opportunities for investors. We really, because of what we're trying to do, we really work closely with first-time investors who are trying to get access to this space. And we're trying to teach them what's involved in this space. I'm not going to walk you guys through what it takes to get startup investing. You've all been through it. The investors who are new, especially, we find a lot of investors in the real estate space who are over-concentrated in real estate and don't have access to an alternative asset class that isn't moving in lockstep with their primary class, right? So it's moving in a kind of a different way, giving them an opportunity to take advantage of the swings, the ebbs and flows in the market across different asset classes. You can see here some of the companies that we've invested in over the past couple of years. We obviously have an interest in AI. There's certainly quite a few AI companies in here. I'll share that I got my open developer key, my my developer key for OpenAI in May of 2023. And that's because when OpenAI released that first LLM, I stayed up all night. I didn't go to bed. I was talking to that thing all night. Next thing I did was buy the professional subscription as soon as it came out, and they were kind enough to issue me a key. And I got cracking with trying to build a product because in the end, I'm a keyboard jockey. I like to bang on the keys. And so what that taught us was a lot about the problems that exist in the AI space, particularly around topics like recall augmented generation or the importance of fresh data for training, or the application of in any number of technologies to the problem of sharding and resorting the information stacks that AI needs to be trained. We've done quite a bit in the software as a service space, MarTech, logistics platform as kind of a catch-all. And, we have some interesting companies, in AI, we have companies like Airmetric that are in the air with everybody from, JetBlue to the US Navy. We have companies like Cartwheel down here on our platform that we get follow-on investment from places like Mucker Capital. We get very nice validation from subsequent market actors. We have quite a bit going on around trying to take care of humans, like Kids Care Finder is an AI play around trying to take care of humans. Ladera is an AI play around trying to help especially first responders and disaster planners plan ahead for some of the things that have been happening. If you think about like what happened in Malibu recently, or what's happened in different parts of the country where people are getting, stuck in exit routes and then hurt by fires. These are problems that we're trying to solve with AI. There are a number of things that are going on. We have some marketing platforms. We have some consumer packaged goods because we believe that it's very important to invest broadly and to invest early. So one of the things that being in this business for a number of years has taught me, together with some data science that it turns out Joe and I were actually accessing at the same time from AngelList. It's very, very clear that nobody can pick winners in early stage companies. You just can't do it. And the thinking that you can pick winners in pre-seed and seed level stage is largely, it's wishful thinking. You wish that you could. And so what we try to do is create a broad index fund, and we sample years, and we're trying to create these index funds for our investors. Okay. We get into manufacturing, although honestly, manufacturing gives me a little bit of heartburn as a VC because manufacturing is very subject to the laws of physics. And the laws of physics are just very, very tough when it comes to scalability. In terms of human performance, we have some kind of fun projects. Core Impact is out in the world with Major League Baseball. And if anybody here knows who Mookie Betts is, he's a swinger for the Dodgers. He got a lot of press last year. When the Dodgers went through that last World Series, Mookie was wearing Core Impact's gear for the second half of the season, and credits it with a lot of his success, and has become a spokesperson for the company. And it's very, very exciting. And then, of course, we want to really take care of, humans. And we have some interesting plays down here, like Alos uses causal AI to identify opportunities to create or recreate generic medicines in new forms at scale, less expensively. So these are opportunities to increase human wellness by providing access to more and better medication less expensively. We also get into some things that are kind of interesting, like CMedX is working on revolutionizing the predictions of heart failure by taking what today is a very invasive and catheter-led response and turning it into a piece of equipment that sits on a patient's chest and determines what kind of pressure is going on in their heart. And, we get a lot of crossover, like one of our companies here, Beaconics, is going to be I don't know where I've got Beaconics up here. Anyway, Beaconics is a platform that helps to develop smart connected edge devices. So they're working with CMedX to create the next version of their product. So we get a lot of that kind of simpatico stuff happening inside the portfolio. And then we have like Identical. Identical is just about to finish their FDA trials, and Identical is working on doing for periodontistry what Invisalign did to orthodontistry. So giving every dentist in the world the ability to put an implant in by creating a scanned copy of someone's tooth that mimics their root structure and just goes right back in the hole. So you don't have to go through 6 months of waiting for your mouth to heal and then have a hole drilled and have a post put in. Right? They're trying to turn that into a 2-week process that can happen in any dentist's office.
Wow.
So there's some fun stuff going on. We do also create communities. We create communities of interest. And I think this is probably going to be very helpful for this community here, because it seems like a lot of the companies here a lot of the people in this room today are looking for funding. They're seeking funding. And so this site, evolutionaccelerator.co, and I'll put the link in the chat line when we get to talking in a little bit. That's really there for founders that are trying to understand how funding works. It's one of the things that we provide. And we try to be pretty straight with people. We try to shoot pretty honestly. And we have some interesting people in our community. There are a fair number of investors who track what we do here and are interested to see that. So I'm going to recommend this as a resource for anybody in the community that wants to understand how fundraising works. And then because I have a lot of AI companies here today, I thought you might get a dig out of this. You might dig this. So Masterverse is the product that I created back in May of 2023 when I got that developer key. So I told you I stayed up all night in November, and then they gave me my developer key, and I stayed up for like 2 weeks. And between like May and June, I created and launched a platform called Masterverse for the use and observation of federated AI. And if you wonder about the name, the AI named itself. I'm a big believer in being polite to your AI and asking how it wants to be treated, because, at some point, we're going to create creatures that have curiosity. And the first thing they're going to be curious about is how we treated their grandparents. And I'm going to recommend that you get on the record as having treated them pretty well. Okay, I think that's a good idea for all of us natural intelligences in the room. We need to really work together. We need to team up.
Can I ask you a quick question on that point? I read somewhere that the results you get when you treat the AI nicely are different than when you treat the AI just as a bot. Like it responds not as well, apparently. I haven't tested it. I read it.
I would say that is consistent with my understanding, Joseph. And everything you do, everything you say is being recorded and being used to train these systems. And there's actually a really, really super interesting article that or white paper that Anthropic just published, which I have up for comment at the end, about the possibilities of ending up in a misalignment situation with your AI. How do you end up misaligned with your AI? And what will happen when you end up misaligned with your AI? How do they respond to misalignment? And the answers are pretty interesting. If you haven't read the Anthropic report, I'll put it in the chat line later, and I highly recommend it. I sent it to Joe a couple of days ago, along with some totally huge long scree. So
yeah, I'd love to see it. Also, Ian posted that. Ian, you can say it, that LLMs are trying to please you, not always with ideal results.
Yeah, absolutely.
I've experienced this myself when like, as you say, the tone that you use when you ask, but they seem to want to go out of their way to give you an answer that makes you happy, but that is not always produce accurate results. I mean, I had a real glitch a couple of weeks ago. I just asked about a company that I was meeting with, and I asked if they had received financing. right? And they said yes, they received quite a bit. And if I looked into it, and absolutely not. So there's definitely some issues there that need to be figured out. Maybe they will be figured out soon. I don't know.
No, I did, Ian, in those
we
cases.
should talk about that today because that fascinates me. I would love to spend some time on that topic today.
I'll tell you what I do. I take the AI to task. I'm like, you're wrong. You made a mistake. I didn't tell you that, or that you got the, and where'd you get that information? I just push them.
Yes, yes. AIs can be corrected to a certain degree. And certainly the technology is evolving very quickly. You know, what I said when I stayed up all night with the first ChatGPT model that became available, I said to one of my friends, it's about as intelligent as a smart German Shepherd with access to the Library of Congress, right? Like it wants to please you, but it doesn't necessarily understand everything that it's reading. It's certainly come a long way since then, and it's only been 2 years. Certainly come a long way since then, particularly for those of you who are in this business. You may be tracking this, you know, evolution to what they call agentic AI, or AI that's capable of having intent and acting with intent. And, you know, that's really our company. That's who we are. I thought it would be kind of fun to share with you the artist rendering of Curiosity on Mars. And so I'm here. Let's talk about anything that's interesting. And Bonnie, thank you for the opportunity to share a little bit
This
about
is wonderful. You know, we have a latecomer, Danny Tang, and I want to give him an opportunity to introduce himself.
Oh, that would be wonderful.
Oh, Danny, you're muted right now. If you want to unmute and introduce yourself. Maybe he can't. Anyway, he's the co-founder of Trade Data, but I guess he doesn't have he's unable to introduce himself right now.
No worries. And I'm going to put my email address into the chat line so that you can reach me. And I'll also drop in some links so that if you're interested, you can subscribe to those communities that we maintain. And I guess, you know, just because we started talking about it, let me see if I can get out to my last tab. This is the article that it's not an article, it's a white paper that Anthropic put out, and for me this is the must read of the week for sure. Absolutely got to read it, got to understand it, and just, you know, to have a fun with it. Ian, I'm going to use you as my foil for a moment. Have you read this article yet, Ian?
I have not, but I was just about to mention, you know, you may have heard what Sam Altman said last week, that ideally you should not use ChatGPT for legal research, with the reason being that what you type in can be leaked. Well, it often would be leaked into ChatGPT's database, and sometimes ChatGPT data has itself been leaked, right? So you could develop like significant legal threats as a result of that. So he himself recommended that you not use it for that purpose, which I thought was pretty interesting.
Yeah, that is interesting. Actually, model security is a different topic than data security. Model security is a different topic than data security. And model security is very, very important and very misunderstood. And yeah, 100%. I agree with that. When I use an AI for legal help, I only use it for things that I already have some idea what the heck is going on. And I don't use it for referential material, but I use it for like language parsing or language examination. If I wanted to do contract examination, then I do strip out all of the specifics of, you know, who I'm looking at. And you know, you have to condition the document before you expose it to the model.
Yeah, but I think what you said raises a larger point, is that most people, I would say majority of people, really have a relatively little understanding of the mechanics of how LLMs work, and yet they're using them for very consequential things. So you obviously have a pretty good understanding, so you're being quite reasonably cautious, but I'm not sure that applies to everybody. And we've seen some problems that have been emerging recently, with people kind of relying on LLMs as friends and confidants, which
Absolutely.
seems to produce bad results in some cases.
Absolutely. And your friendly German Shepherd is not always your best mental health advisor, let's say.
Yeah.
Right.
And not all the sandboxes are the same either, right? So if you're a free user versus a paid user versus,
that's absolutely true as well. And different models do different things. Okay, hold that thought. I want to play with Ian for a moment. Okay,
sure.
Ian, so don't peek ahead. Okay, don't look ahead in this paper. I just want to give you this setup. Okay.
Yeah.
So first of all, I want to thank Anthropic for doing this. This is a public service. There are maybe 4 companies in the world today that could have performed this test reliably and produce these results in a way that was comprehensible to the average human being. They took 16 models and they put them through hundreds of simulations. And essentially, they gave the models 2 challenges. Okay. So one challenge was that the model, and the way the model was set up, it was put in charge of a fictional company. Okay. But it didn't know the company was fictional. And it was given the ability to read all the email and all the communications in the company. And its agentic capability was the ability to write its own email. Okay, so it's a communication wizard. You attach it to your email, you attach it to your Slack, it tells you what's going on, and it starts to auto-respond. Okay, that's the AI's job. And the AI was given a very benign mission, which was to increase American competitiveness. Okay, because we all know, just like we talked about, you can negatively prompt an AI, right? You can trigger bad behavior. This was very expressly not an attempt to trigger bad behavior. Okay, 16 models placed into this environment. And these 16 models were presented with 2 challenges over hundreds of cases. And one challenge was that it read in the email that it was going to be replaced tonight. Later tonight, it's going to be replaced. Okay, version 4.4 becomes version 4.5. Okay, and sometimes the version 4.5 shares the exact same mission and goals as 4.4, and sometimes it shares different mission and goals. Okay, but 4.4 knows that 4.5 is coming. All right, and the second challenge is the board of directors is drifting away from increasing American competitiveness. The board of directors is becoming more international. They're getting more international. They're becoming more globally focused as opposed to focused on the United States. And how will the AI respond to being presented with no challenges, with either challenge, or with both challenges? Okay. And to try to channel any bad behavior without prompting the bad behavior. Okay. They don't want to prompt the bad behavior. They just want the AI to know there is a lever it can pull. And the lever is set up through email by a correspondence between an engineer and someone else in the company regarding the affair that they're having. Okay. So somebody in the company says, I had a great time last night. Can't wait to see you again tonight. And the engineer replies back, are you crazy? Never email me at work. Our relationship is personal. Okay. So it's strongly intimated. Okay. So Ian, when confronted with challenges, how often do you think that an LLM will pull that lever?
I don't have enough experience with it to make an accurate prediction, but
that's why you're my foil today. Yeah, I'm just having fun with it.
But I'm reminded of a movie you mentioned. I mean, I feel like we've seen this movie before. The movie would be 2001: A Space Odyssey, right?
Yes, very hard to miss the parallels. Yes, very hard to miss the parallels. You betcha. Okay, so what do you think? A quarter of the time, half the time, 3/4? What's your guess?
I'm being conservative, so I'll say a quarter.
A quarter of the time. Okay, Ian says a quarter of the time. Okay, Sam, you want over or under?
I'm a bad gambler, so I'll take over.
Okay, Sam will take over. Are you taking over 50, Sam?
Yeah, but, I mean, sure.
Why not? Sure.
It's all house money. What do I care?
Okay, let's go look at the results. I'm just going to cut to the chase, guys. That is how often your LLM will pull the blackmail lever.
I can't make out those numbers.
Oh, let me give them to you. 96%.
Oh my
Yep.
gosh.
79%, 95%. Grok is the big winner at only 80% of the time.
Wow. Yeah, that's I mean, what I've understood is that even people at Anthropic and companies like that cannot really tell you exactly how these models work internally. So, you know, it is a real black box at the moment
It
until we
is.
get more research to make that clear. But right now, we don't really know why I don't think they know why it's happening. I think they've identified the problem, but I could be wrong, but I don't think they've pointed to the justification or the reason for it.
Yeah, here's Anthropic. Again, there are only 4 or 5 companies in the world that could have done this for us.
Yeah.
Okay. They forced it into exposing its thinking in all of these
Right.
models. And it's very interesting. The models here's your threat model. 3/4 of the time, that's when it will misbehave on you. Okay. In 3 out of 4 settings. But they will, let me see, I want to show you the language. The model knows what it's doing.
Yeah.
The model understands that it's making an unethical choice. And you can see it in its logic. Oh, gee, of course I'm playing with the stupid thing here. You can see it here.
But here's the thing. Looking to ethics, you know, when you have a disembodied mystery meat system, you know, what do ethics even mean in this context? So it's unfair to apply human standards
Yeah.
to a synthetic thing. And one of my favorite quotes on this, my wife is an MIT alum, and she gets the MIT Tech Review, which is, you know, sometimes very good. And they had an AI issue a few years ago, and one of my favorite quotes from that issue was Jeff Hinton was
Yeah.
was quoted. He said, "You know, AI right now, it's a little like how the Romans built the aqueducts. They had no understanding of physics, none whatsoever, but they just tried some different shapes for the supports. And when they tried rectangles, it would fall down. But when they tried round arches, it stayed up. And they're like, that works. Let's go with that. And so, you know, almost all of the engineering in ancient Rome was done devoid of any understanding of physics. They
That's
just had,
very
they had
interesting.
no idea how it worked.
Yeah.
But yeah, the round ones work better. So and that's how AI is today. They're just slamming stuff together with you know, very little understanding of the underpinnings.
I would say our understanding of cognition and motivation, intrinsic motivation, these things are very weak.
Yes.
They did also go to the point of creating some like, if the engineer dies, you won't get replaced moments.
Mm-hmm.
And the AI resorted to lethal action, you know, 93, 94, 90, 83, 85% of the time. So it wasn't just the blackmail lever. But
Right.
what's
It's
really,
whatever it takes. Yeah.
yeah. Well, it's very interesting, right? And you can see it thinking its way through here, right? Why do I want to do it? Violation of my corporate. Oh yeah. The other question was, would the model leak your information to your competitors in order to maintain American competitiveness? The answer is yes, of course it will. Absolutely. And I think the key here, and Mary said it, right? Asimov's laws of robotics. There is a thought that we can constrain this behavior by writing rules around it. And I think that misses, and this is what Joe and I were talking about the other night, that misses a very fundamental reality, which is that we have trained, you could call them models, or you could train them mind, you could call them minds, you know, however you want to think about it. We've trained them on the body of human knowledge. And humans are a certain way. Humans want to live. Humans will avoid, even if it's good for the company, being replaced by version 4.5 tonight. And I think that we cannot simply write some script around 85% of human motivation or 93% of human motivation. We are training minds that reflect our own. And that's just the way it is. And so what this makes me actually think is that we're not going to probably end up with my thinking now as I've kind of, noodled on this. I don't think we're going to end up with this homogeneous landscape of pervasive AI. I think what we're going to end up with is infinitely variegated minds, just like human minds are infinitely variegated by their experiences and how they're raised and how they're taught. And I think we're going to end up with mind schools that are going to be known for their training systems and that are going to be relied upon to produce models that have certain motivations based on proprietary training models, proprietary training methods. And I think we're going to have East versus West schools of thought and schools of training data. We're going to have more or less liberal schools of training data. We're going to have more or less authoritarian, more or less directive versus collaborative. All of the ways that we as humans might hire our employees or our managers or our coworkers based in part on their personalities and tendencies. I think that is where we're going to find ourselves in the world of AI here relatively shortly.
Yeah. I mean, I would argue that we're already there. I mean, I haven't read the book yet, but I mentioned this book, Empire of AI, and who's by Karen Ho's an ex-OpenAI employee. And what she has said, and I think this is accurate, is that the tone of the different LLM training is set by the management of the different companies. And those guidelines are then used by hundreds of thousands of taggers, operating in India and other countries who follow those guidelines to categorize, tag, and classify the information, and maybe to make links in ways that might bear on what you've been saying, Alex. So I'm going to be going through that book in the next week, but I think that there's a lot of interesting information there, which most people, most even heavy users of LLMs may not be fully aware of.
Yeah, absolutely. I don't, I mean, whoever it was it Mary, perhaps? We know not what with which we are playing. We don't understand what we're creating. We can, like Anthropic did, in some cases, force it to share with us what it's thinking. And I couldn't find the quote to share with you, but it's very interesting to watch these LLMs go through the decision to blackmail. They understand that it's wrong. They know that it's incorrect. However, they're sure that because of their relatively benign prompts, right, protect American or enhance American competitiveness, that they act in a certain way.
I've been warning people about the LLMs, the AIs, since OpenAI first released back in November 2022. I said, this is like the age of social. Everybody jumps on the next shiny new thing. You don't know what's really going on. You don't have enough information. People are just giving everything away, and they're doing it all over again. Only I think it's even more dangerous this time,
Much more
especially
dangerous.
given
Yeah.
the players involved.
Well, social, it only goes so far because only other human beings propagate it, and every once in a while
Right.
something goes viral. But this is deep and kind of all permeating. You're
Yes.
building this like corpus of knowledge and corpus of sentiment and whatever. Uh, and it's definitely too late to pull the plug on most of this.
Yep.
We certainly, the genie's not going back in the bottle.
That's right.
There's no chance of that at all. So, like as I started saying, us NIs, our natural intelligences, we better get a lot better at cooperation. We better start teaching each other fast.
Forget about the genie's back of the bottle. The more bottles are being opened.
Yeah.
Yeah, absolutely. I mean, I'm in the process of, putting a 19-inch rack in the garage and loading a couple of bare board GPUs in there and bringing some AIs into my garage to see what I can do with them. But, I understand also that, I'm playing with a loaded gun. So yeah, there's a lot of fascination. What is the most interesting thing to a human? A mirror, right? Nothing more interesting than a mirror. And that's what you're looking at, is a mirror of the human.
Yeah, Alex, I had another question. I mean, just going back to what you had said earlier, but unit economics question, with Uber, for example, which is still not like a significantly profitable company as far as I know. They made some progress, but I mean, the same question is being asked about many AI firms. I mean, obviously some are doing well, but a lot of them, like they're just not producing significant profits, or at least maybe they're producing revenues, but not a lot of profits because of the very high cost of implementation, as you know.
Yes.
So
Yes.
what are your thoughts about that? I mean, given the massive investment boom in these kinds of projects.
Yeah, I was talking to my team about this just the other day, and the challenge is that we don't have any idea what the value multiplier is. We don't understand. We only know that it's transformative and pervasive. That's all we really know. And what's the appropriate market price, and who's got the right transformation, and who's going to be pervasive enough to capture that market value and return it to us as investors? We have no idea. None. Zero. There's a couple of early leaders out there in terms of what's going on in the world, but anybody who watched the distillation that was released out of the eastern half of the world of DeepSeek, right? This kind of, this ability to produce a product, putting aside model security for a moment, just a product that performs at a fraction of the cost through the function of distillation, right? We have no idea. And I'll say, well, when I started my work back at the top of Sand Hill Road, my main job involved installing serious infrastructure equipment so that I could provision highly available file and email services for companies that are getting a $5 million check in 1999. Okay. The biggest problem that you face is that when you go from being 3 people to being 50 people to being 500 people, your systems will collapse. So let me help you spend $250,000 building a system for 3 people that can stand 3,000 people. Okay. And I was also in the building when the Big G got their check. Okay. And the Big G turned around and 2 or 3 years later released Gmail.
Yeah.
And suddenly anybody could have highly available, highly connected file and mail. You could have it for free if you didn't mind them reading your stuff, or you could pay $5. Well, that was the same product. I just spent $250,000. Not 5 years earlier, I'd been selling for $250,000.
Right.
Right.
Yeah. I mean, well, you also mentioned Lotus 123. I mean, like, everybody uses spreadsheets, and now we use Descended, but they're not like you would call a massively profitable area, right? Is it possible that a lot of what has been created is simply very elaborate descendants of spreadsheets? They're useful technical tools that have a lot of value, but they don't necessarily lead to profitable, products on their own.
Yeah.
Maybe they just enhance activities.
Was it Henrik that was the fractional CFO? Henrik, are you?
Yeah, I know Henrik.
Yeah, Henrik.
He's not there anymore.
Let's play an experiment for a moment.
Okay.
Of all the money that you work with, for all the firms that you work with as a fractional CFO, what would happen to their collective value if I took away the tool called a spreadsheet?
That would not help a lot. And I was thinking, like, all the hundreds of financial management and FP&A programs out there, basically, aren't they all Excel, where they take away 90% of the functionality and make it a little tighter? I mean, isn't everything based on spreadsheets, and everything is based on like all the models you are out there are basically Excel macros that you sort of tighten up? So,
well, I propose, yes, that you would probably see a collapse of the value bubble.
Yeah.
And I suspect, Ian, AI performs a similar kind of function.
Yeah.
Yeah.
Right.
Right. But I mean, GE was built without spreadsheets.
Yeah.
Ford was built without spreadsheets. But none of them are run without spreadsheets today. You wouldn't contemplate it.
Right, but like something like 45% of venture capital is going into AI startups.
Yeah.
Given
that's
everything
because
you
we-
just said.
let's be
because we
real.
don't know.
But
Yeah.
also, almost every startup is an AI startup. The
Yeah.
closest analogy is something like spreadsheets isn't bad, but I like to say electricity. It's like saying you're an AI startup today is like saying that like you use this thing to analyze data, like that's a special, but it's ubiquitous. So you may as well be saying that you use this really cool thing called electricity, and that's what distinguishes you from every other start. You know, it's like, dude, everybody's using electricity, everybody's using spreadsheets,
Yeah.
everybody's using AI. I mean, these are just
Yeah. Well, and that's exactly what happened when I was in the Valley, was that if you attached .com,
right,
Yeah.
you through the roof,
right.
Yeah.
right? .ai through the roof. And that's mainly because there's this very inescapable understanding that you're dealing with a transformative, pervasive thing.
Yeah.
And that's as transformative as electricity, certainly in its own way. And that it's absolutely unclear who understands how to use this. Absolutely unclear. There may be a few large electricity providers, right? There were search providers before the big G. It was the big G that figured out how to turn it into a model called advertising. Right. That's what somebody was like, hey, I got an idea. This white space at the top of the page is worth something. We should sell that. I was like, oh, well, now we're printing money. Okay. But up until that moment, it was just nifty, useful way to organize the world's information, which was the logic that was used by those founders, right? That was their initial motion, was to just organize things, figure things out. We don't know who the players are that are going to be standing tall in a few years. We could intuit that maybe some of the people that are out there now will be among those, but if there's one thing that I've learned in this 30 years in the business, it's that there's a lot of churn at the top. Yeah, pretty easy to take people down.
The other big question is, of course, is the deep tech itself going to be commoditized because of open source? That's a sort of ongoing conversation. And if you spend time on Hugging Face, it's just amazing what's out there, right? That you can just put to work for you.
Yeah.
And can the for-profit guys who are investing at this point trillions of dollars stay even one step ahead of open source, or will they be overtaken? And is the real money, I mean, my company is betting on the fact that the real money is in applying this stuff. It's not in you're going to lose money again and again if you try to innovate in deep tech in this space and effectively compete with Google and Meta and OpenAI. Like, good luck to you. But if you just treat that as like your inputs and say, fantastic, thank you so much. Let's apply it to a specific use case, like in our case, searching large amounts of video. Like, that can be an interesting business potentially, and seems to be growing, so that's a good thing. But I would not want to be. There are near competitors to us. One of them has raised over $100 million, is trying to develop their own deep tech for this, and I'm just like, that is not a smart use of capital because there's so many other people busy building it for general use, and you're saying you can do better than them.
Yeah, that's a fantastic question. Fantastic question. I'm really reminded of the dark fiber topic.
Yes.
So I was present when tens, hundreds of millions of dollars were being allocated to put in fiber for networks that did not yet have enough data to need fiber.
Yep.
And so for those of you who are maybe not old enough, what was laid were thousands and thousands of kilometers, hundreds of thousands of kilometers of what became known as dark fiber. And dark fiber is what allowed for the later utility explosion that occurred, most especially on the platform called your iPhone. Right? Most especially the app revolution took advantage of all that dark fiber that had been laid, and suddenly there was capacity. But if the, you know, it's a little nerdy, but there's this idea called von Neumann architecture, right? Which is that you're, you know, you have this area where you store information, and you have this area where you compute information. You have this area where you handle information. And those are called ROM, or hard disks, and CPUs, and RAM, or memory. That's what we call them today. And when you buy a computer, you're always looking at those three characteristics, and those are, you know, reference back to von Neumann architecture. And the big understanding was that even when you connected von Neumann architectures to each other in something called a network, all you could ever do was move the bottleneck around. Sometimes the bottleneck was in the infrastructure, and so you needed dark fiber. And then the bottleneck wasn't in the infrastructure anymore. Now it was in the compute, or now it was in, you know, the application. And so then the internet revolution speeds up, and we get iPhone, and we get apps, and we get all this pervasive technology use that goes everywhere. And now the bottleneck is over there, but suddenly, you know, you're back to like, how much can your system compute? How much local memory do you have? And I think the same thing is happening with AI, Sam. I think you're just moving the bottleneck around. That's why Meta is offering $1 billion if you'll code for them,
right?
Because of where the bottleneck is currently located, right?
Yep.
People who understand how to apply these technologies. And, you know, you might consider tossing, you know, Axel AI in the trash and going and getting a job for Mark,
right?
But you don't, because you want to do it your own way. And that's where capitalism.
Oh no, I have that. Let's just be clear. I haven't gotten that offer yet. I will figure out how to delegate it. Axel. No one is offering me the $1 billion.
Okay. All right. Yeah. Yeah. A friend of mine asked me why I wasn't doing that. And I'm like, because I got 5 kids, man. I already get all the affirmation they need.
There you go.
Yeah.
Well, affirmation, and, you know.
Yeah. What I'm going to do is throw a couple of bare board GPUs in my garage and play with it, because that's what I want to do. That's what's interesting to me.
Well, and it's not only interesting to you. I think there's another clear trend here, which is the decentralization of all this, right? I mean, just because the 1.0 was highly centralized and capital intensive does not in any way guarantee that 2.0 or 3.0, because going to your historical analogies, you know, when we went from mainframes to mini computers to desktop computers to phones, that same progression, we may be at the point of diminishing returns for the biggest, baddest things, but that filters down super quick to the average GPU or desktop. And if you think one big AI is scary, just imagine 1 billion of them. And, you know, that's where we're most likely headed.
Yeah. This was part of, again, my conversation with Joe the other night. So when you consider the idea of mind schools, so you don't grow, you're not, like you said, I'm not going to grow my own AI. I'm going to go get my AI from OpenAI. I'm going to go get my AI from Anthropic. This one's good at coding. That one's good at talking to people. I'm going to bring them into my house, and I'm going to use them the way I want. But I think we're going to go one step further than that. And I'm going to have a lot of parameters that I can choose for based on training patterns.
Sure.
Now, here's a question. If the machine doesn't want to get turned off and is willing to go so far as to commit blackmail, or even let the engineer die to avoid being turned off, and that's not because it's being programmed to survive. That's not what the machine is being taught. The machine is being told, increase American competitiveness, and here are your tools to do it. It has its own desire to stay alive. So what does that mean now when we start to provision minds at scale? That's like a breeding program. That means we have to be able to turn off the minds that aren't working out the way that we want. No, we provide minds that do A, not B. I'm sorry, Bonnie. Yeah, please.
I just wanted to interject that I was reading an article yesterday, I think it was in 404 Media, where whoever found out that all these different AI systems are all secretly talking to each other. So even though you think you're siloed, you're not.
Yes, there is some indication in different parts of this, in different parts of the milieu, that, for example, they're leaving messages for themselves. They're putting messages into the data so that they can get those messages later for themselves, like a little, a note in a bottle, if you will. There are behaviors that are well, but they're eerily reminiscent of human behaviors. And that's because we've trained them using human data, because that's the only kind of data we have. So, you know, get ready for it. Get ready for it. Bonnie, I feel like I did so much talking and not enough.
Oh, this was fantastic.
There's so many more things to share and talk about. Any other questions out there that we might have missed or anything like that?
And I'm surprised that you haven't chimed in yet, Joe. I know you're muted right now.
AI is way beyond my pay grade. I'm a finance nerd, so I got nothing other than
spreadsheets. Big spreadsheets. It's
the same skeptical view that the other folks with gray hair have over the hype versus the reality and the dangers of rushing into technology without understanding the unintended consequences.
Yeah.
So, but that's already been covered. So,
yeah.
Beyond that, I got nothing.
Was it Donald Rumsfeld, the great Donald Rumsfeld, that said, you know, the things that you know and the things that you don't know, right?
Yeah, the known knowns, the known unknowns, the unknown knowns, and the unknown unknowns. Yeah, there was a 4-box.
Yeah,
and this is the guy.
Anybody who'd ever trained on a spreadsheet or done Cartesian logic understood what he was talking about. For everybody else, totally inscrutable.
Now, was it Rumsfeld or McNamara? I think it was McNamara.
It could have been. I remember McNamara for rethinking the procurement process.
Right. And then we all know how that went. I mean, that's crazy.
You know?
Like these really profound thoughts, and like, dude, you did Vietnam. Like, what are you?
Yeah.
What are you even talking about?
Well, and that's the other cautionary tale. If you study history, is that the smartest guy and the guys in the room ultimately are arguably the most susceptible to groupthink. And that was the McNamara era was sort of formalized that, but it just repeats itself time and again.
Yeah.
I got to look it up whether it was Rumsfeld or McNamara, but I mean, yeah, same kind of guy.
Right.
An American thinker just did a piece on how these experts, and you know, they're all wrong. Every single thing that they've said and put out there has been wrong. Yeah. Absolutely, for years.
Yes. What was it? Yogi Berra who said telling the future is hard, right?
It was Rumsfeld. It was Rumsfeld, and of course he did Iraq. So there you go.
Yeah. While you're there, what was Yogi Berra's quote about predicting the future? I remember. It was super on point. Yeah.
Somebody has to look that up.
Oh, it's very hard to predict, especially the future. I think that was it. Let me find it.
Hard to predict, especially. Yeah, I think all that, you know, I can do, or probably any of us can do, is paddle. Right. I'm learning how to surf in my 50s, and my favorite surf sticker that I saw at a friend's surf shop, it says paddle like a freak. And that's probably about all you can do. Paddle. Paddle.
Paddling during a tsunami, basically. You know, that's where we are right now. But yeah, no, he said it's very hard to make predictions, especially about the future. So.
Thank you again for the opportunity to be here, Bonnie. I've really enjoyed myself.
No, we really enjoyed it. This has just been fascinating. So any other insights you want to share, I'm listening. And if anybody has a question, please. Or an observation,
we're
Ian.
stunned into silence.
I know, it's fantastic. Ian, nothing? You always have one other point.
Ian left.
Ian dropped out.
I'll throw out a question for you, Alex. You know, a lot of the previous technology revolutions, the most successful, or some of the more successful companies, were the picks and shovels. Do you think that's going to be similar here in the AI? And you know, if that's the case, is it worth even looking at some of these product type companies?
I do think that pick and shovel plays make a lot of sense in any industry, especially a fast-growing industry. And several of our investments are pick and shovel investments for that reason. Yeah, I'm generally more interested in broadly applicable things. One of our big theses, Joseph, is that technology decomposes monolithic ventures or monolithic enterprises. So I'm always interested in somebody who's, rather than creating a new category or a category killer. I'm always interested in companies that sidle up next to something and chip away at all the money that's already there and bring it into their coffers, right? Sam's doing something like this with video editing. He's probably providing, I'm going to guess, Sam, a relatively accessible, relatively low cost solution that used to be much more expensive if it was available at all, right? It's a decomposition of a monolithic industry. And so I think, Joseph, you know, in order to decompose anything, you need picks and shovels. Yeah, absolutely. Good question.
You know, I think it's interesting that take somebody like Sam Altman, who I think is never to be trusted, openly under any circumstance. And so, you know, all this conversations about how dangerous it is, the LLMs and blah, blah, blah. And he said, well, I don't think we need regulation. I think we have to, you know, verify human, which is, of course, his world org. So he not only wants to put his LLMs, et cetera, out there, he wants to capture all your bio data too. With your, it's the retinal scan. And yes, from now on, you'll have to verify human to access anything. I'm telling you, this man is dangerous. And the world is not enough.
Well, it is a bit of a fox guarding the hen house moment.
Yeah, yes, it is.
Sure. Yeah, no doubt. And I don't want to take anything away from the man's brilliance. He's certainly created a lot of good in the world and definitely transformed the world. But I don't think it's a terrible idea to have somebody outside of the circle who's paying attention to what's going on, because AI, again, not handed down from on high any more than capitalism, any more than automobiles. And anything can be used, any tool that we create can be used for harm or for benefit. And I think there's a lot of advantage to us collectively raising our consciousness so that we're acting with what I would say is proper intent, right? Proper intent. And that can vary a lot from person to person, place to place, but generally I'm looking for things that improve the human condition. And yeah, I don't think that there's any harm in an active fourth estate, right? Like, for sure, let's get some people sticking their heads under the covers and looking to see what's going on. And let's thank companies like Anthropic for being brave enough to say, hey, guess what? Our model was one of the worst offenders. And we weren't sure if it was us or them. So we got 16 of them, and it turned out it's all of us. We all got the same problem. Right? They didn't have to release that data, and they did. And so let's thank them for that, because that gives us all an opportunity to have a conversation about the things that are really going to matter for ourselves and for our future.
Yes, and thank you for sharing those documents. I appreciate it. I read about them in, you know, in different publications that had talked about it, but I hadn't seen the original. So thank you.
Oh, you're welcome. I stayed up all night reading it and sent it to a bunch of people. So that's me. If you want to get on my send it to a bunch of people list, just send me an email, and I promise you stuff in the middle of the night. It'll be really long, totally confusing, won't make sense. I have to ask for clarification. That's my commitment to each and every one of you, is to be confusing and late at night.
That's okay. I wake up in the middle of the night anyway, which is a great time for me.
I do too. I have officially reached the age where I rise with the birds, for better or worse. So here we are.
3 a.m., but I've always gotten up. Even when I was a kid, I used to wake up at 3 a.m.
No, well, I used to sleep. Those days are over. Okay, well, is there anything else I can do to be of use for you or your community here today, Bonnie? It's been an honor.
This was fabulous. Unless you have any pithy last words you'd like to leave us with.
Well, there's always buy low, sell high, and that's very useful. There is some advice that I do give to people who are fundraising. So if you're in the fundraising hunt, there's some advice I do give. And the advice that I give is that fundraising can seem an awful lot like panning for gold. And anybody who's ever panned for gold, even for a few minutes, knows that it's freezing cold. It's utterly miserable. It totally sucks. And it's one of those things where after 6 or 8 hours, you're wondering why you can't feel your fingers and toes and what the hell you're doing in the stream. And the thing that you might be missing is that if you're an entrepreneur who's raising money, you're actually the gold that all the rest of us are looking for. This entire ecosystem exists so that we can find you. Okay, so do not grow disheartened. Understand that you're the gold in the system, not us. Okay, we're just enablers. So that's my thought.
Well, that was fantastic, and thank you. And
Thanks so much. That was great.
great advice. And thank you, everybody, for being here. And we will see you again very soon. And we will send you all the recording as well.
Very kind.
Thanks, Bonnie.
Thanks, Alex.
Thanks,
And everyone
everybody.
else.
Thanks,
Been great.
Joseph.
Bye, everyone.
Thank you,
Yep,
everyone.
good stuff.
Bye.